Welcome to the BS Your Way Through Life show. Super excited. Today we have Bronson Hill, and he is a seasoned real estate investor and entrepreneur passionate about helping people achieve financial freedom through smart investment strategies with a focus on multifamily syndication. He has guided countless individuals toward passive income opportunities, empowering them to break free from traditional financial limitations and build lasting wealth. Welcome, Bronson.
Elizabeth, I'm super excited to be here to BS my way through life and the interview. Let's do it.
Woohoo! And I didn't say Branson yet.
You didn't. It's okay. I'm sure it'll happen. It's okay.
Okay. Okay. First thing, what is for people who don't have any clue, like me before I did some research, what is multifamily real estate? What's all this?
Yeah. So I'll just start with my story a little bit. So I was a
Please.
well-paid medical sales professional. I was making over 250,000 a year. I enjoyed what I did, but one thing I didn't have is I didn't really have control over my time. And so one of the things a lot of people will say I'll talk to that own a business or they are a professional will say, I just wish I had more time. So they're saying financial freedom, but really what we want is time freedom. And so I even worked with a couple physicians at the time that made over $2 million a year each, which is a lot of money, but they work 60 to 80 hours a week every week, right? So no time for surfing, no time for jamming, no time for any of that. And I thought, that's not really what I envy. I'd rather work less and make more, or at least make enough. And so, Warren Buffett has this quote, and he says, unless you learn how to make money while you sleep, you'll work until you die. And so a lot of
Love
us,
that.
yeah, a lot of us will buy rental houses, we'll do online businesses, we'll do stock trading, but these things aren't actually passive because they're not actually very scalable, and we don't really value our own time. So really, kind of at the top of this, whether it's multifamily investing or it's other investing in other things, businesses or oil and gas, other things we do, it's all about if I do this investment, will this create more work for me and create another job for me? Or will this actually allow me to free my time up and create what we call mailbox money, right? That's the name of my podcast, which you're going to be on soon. It's called the Mailbox Money Show, right? How do we create
Yes.
your money actually working for you?
That is awesome. I love that so much. So it's amazing how we get into life more. It seems like money is how we function, money is how the world goes around and stuff, but we get to a certain point where like I'd rather be able to have freer time. Like yeah, I'm making okay money right now, but I'd rather make just a little bit less
Hmm.
and but be able to have more free time because we realize we want to focus on the things that matter to us most.
Yeah,
And I think
100%.
that's amazing. And you're not sacrificing anything when you do that. You're literally, and sometimes when you do that, you end up making more money
Yeah.
than you ever thought. And you're like, oh, whoa, my capacity just opened up. I think that's
Yeah.
amazing. So, why is multi-family real estate considered a more stable and scalable investment compared to single family home or just compared to whatever,
Yeah. Yeah. So
any
I think
investments actually?
Yeah, I think for a lot of people, we know a lot of most of us know somebody who does real estate and has done very well over the years. They've made a lot of money, and we all know we kind of should do something in real estate, right? Because
Yeah.
we make money, we should do something in real estate. It's a way to build long-term wealth. The challenge is when you actually do it, it's a very long-term approach. Right now, actually, especially right now, because rates are higher, insurance is up, it's very hard to find real estate, particularly single family, that actually cash flows at all, right? So you put a down payment down, and then if you're the money you're getting for rent, if you have a place rented out or you're renting a property, it's hard to even kind of have that break even. So if that's the case, you're
Right.
kind of, being negative every month. So you're not actually really investing. You're kind of just putting money out there. You're hoping for appreciation, which may or may not come, may take a very long time. It typically works over a 10 or 15-year period for a lot of people, but it's a very long-term way to become wealthy. I was able to basically 20x my net worth to a multiple seven-figure net worth to about $4 million over a 4-year period. And how I
That's
did it was
incredible.
through, yeah, I think investing in multifamily real estate. And so what I realized is when you're investing in single family, a lot of times it's just you. Maybe you have a property manager. We had 3 or 4 single family houses. It was a lot of work, even though I wasn't the one managing the property. I was getting those calls. Hey, the tenant trashed this, or the toilet's broken, or they're not paying, or the city is upset about it. It was all these different issues. I'm like, man, I'm not even doing the work and I feel stressed, versus when you have, let's say you have 100 units and they're all in one spot instead of 100 houses. You imagine 100 houses, you have to have a repair guy, you're paying him 50 or
Yep.
$75 an hour, and
Oh
he's
yeah.
go to the place, go to Home Depot, go get the part, go
Yep.
back over. It's very inefficient. Versus when you have one place, you'll have full time, maybe one or two full time maintenance people. All they do is work there. You get a discount on the labor, so it's much cheaper per
Yeah.
hour.
Oh, so much better.
There's one roof, there's one set of plumbing, there's typically just a few colors that for the paints, everything's there in house, same appliances, so it's much more efficient. And so that's where I think when you go larger, it actually gets easier, and then you get better management, you get better everything. And so I think there's just a lot of idea of really wanting to go to be able to scale and not just focus on the little stuff, but to look bigger.
I love that because I got to tell you, I have a friend and she is a property owner manager for apartments and also like a townhouse. And oh my goodness, the stress that she gets when she has a property manager, but still they call her because she tries to stay involved in everything. And to find a good plumber, to find someone who's
Yeah.
actually going to do the job, give you
Right.
a price, and actually do it correctly
Yeah.
is a pain all by itself. And it
Yeah.
is so expensive. Like in 1 month, she spent like $20,000 because the tenant didn't report a water leak issue, right? And now they have to
Yeah.
tear out the entire wall, redo the kitchen, right? And it's like,
Terrible.
oh, but like when I
Yeah.
was reading your website and I was learning how, this works, I was like, oh my gosh, this takes the stress out of it. You
Yeah.
basically earn money while you sleep. Like literally. This is
Yeah.
amazing.
Yeah, it really is, and I think really, too, it's really important for anyone to really figure out what your goals are. And a lot of times, I'll
Yeah.
ask people like, I've had talked to over 2,500 millionaires at individual calls. We've raised about $50 million now from different people, and so I always ask the question, what's more important to you, cash flow or appreciation? And a lot of people would be like, well, appreciation is money going up over time or making a lot of money someday, and the cash flow is just every month, every quarter. Be like, well, a little bit of both, a little bit of this and that. But I've come to believe, and I talk about this in my book, Fire Yourself. It talks about replacing your
Love
working
the title,
income.
by the way.
Yeah, yeah, exactly. Replace your working income with passive income in 3 years or less. I think that cash flow is so powerful because it allows you, once you have your living expenses. For me, I wasn't living super extravagant. I only needed probably about 6K a month for me to
Okay.
live well enough, kind of at baseline, to where I can pay insurance and housing and travel and all the things I needed to do. It wasn't 250K. It was much less. And so once I covered that with making enough in my investment income, I was free and I had a choice. Do I want to go to work or do I not? So I didn't have to replace the bigger income number. I could replace the other number. And that's really, I think, the first number for people to fire themselves. So because of that, we look at deals and we look at deals in real estate. We're doing a lot of stuff outside of real estate now because of the cash flow is not there as much. So we're doing things like oil and gas, which offers some incredible tax benefits as well as cash flow. We're buying businesses. We have some on the debt side in real estate that's providing cash flow. So again, just things that really help people to be able to leave a job to retire, or if you had to, you could leave, right? So let's say,
Right.
God forbid, you had a health issue or a family member had a health issue, you could actually take time and go take care of them or take care of yourself if you needed to. So that's, I think, the thing we don't realize, our health and just our things in our life being so stable, but what happens if something shakes up? And so having
Yeah.
that freedom to be able to roll with that.
Exactly. That and on that note, so like taking risks. Okay, we don't get anywhere without taking risks. So why is
Yeah.
it crucial to embrace risks and push past fear in order to discover new opportunities? And how did you specifically do that?
So I have an interesting idea about risk. I think I was just talking about this earlier on another interview, and it's the idea of risk. There are risks that, okay, you got to look at the upside of a risk. Okay, if I take this risk, there's a chance I could 10x or 100x my income, right? Or 2x, whatever the upside would be. But then you have to look at the downside. Is the downside that you would die if this doesn't work out, like literally die, or what, you lose all
Right.
your money or you go bankrupt? Like those are not good risks to take. But a lot of times, what I found, Elizabeth, is that in life, it's not just in investing, but if I learn a new skill or if I start going to real estate meetups or if I maybe do a training program with someone or something like that, I'm going to put some time and effort into this. And if, I'm going to put a little bit of money into it, but if it doesn't work out, I'm going to be out maybe a little bit of money, some time, but I will have learned some things, right? So I think there's a lot of ways to minimize risk to where it's not like a worst case scenario, right? I'm putting it all, and I've seen some investors
Yeah.
where they take, they want to put all their money on one thing, like put it all in red or something at a casino is kind of what it feels like. And that's not what I'm talking about. I'm talking about saying, can you take calculated risks where really the investment is not only how the investment performs, it's an investment in yourself and how you can learn. And so I think that, for me, part of the risk was saying, well, I have this great corporate job. It was the golden handcuffs for me, right? I want to leave. My whole family was a family of teachers and government workers and whatever. And they're all like, why would you leave your great job? Don't do it. And they're like trying to talk me on the ledge. But I said, I don't want to be, 70 or 80 years old and think, just wish I had tried, and if it didn't,
Yeah,
and the downside is if it doesn't work, I could have gone, I could go back to medical sales. Like it's not like it was the end of the
right.
world, right? It's like,
It's not
oh,
the
well,
end of
that
the
should,
world.
but in our mind risk, it's like, oh my gosh, if it doesn't work out, that's going to say this about me personally, and I'm going to be a failure or whatever. It's like, well, that's not even true. That's just a story we make up. And so we have to
It
kind of
is.
talk ourselves through it sometimes.
Yeah. Oh my gosh. So well said. Cause yeah, I remember I don't know, I'm a person who loves to just try things and do things right.
Yeah.
But then when I got married, my husband, he's all about like taking risks and things like that. And at first I was like, that's scary, right? I'm all like fear is definitely making my decisions, right? And
Right.
but then I'm like, okay, I want to be supportive. So because I'm the type of person that wants to be supportive, I didn't say no. We're like, let's do this, right? And holding my breath the whole time, like, and once we would do it, and whether it failed or succeeded, I'm like, oh, that wasn't so bad. What was I so freaking out about? Like, we didn't die. I woke up
Yeah.
in the morning still breathing and eating, and there's roof over my head. I'm
Yeah.
fine, right? So we would just take more risks, or we just like try something new. Like we have tried so many different things, right? Okay, that one didn't work. Oh, we don't really actually like that one. Let's do this. You know what I mean? Until we like stumble upon the thing that we actually like doing, And
Yeah.
yeah,
There's this
so
saying, I think it's by Mark Twain. He said, "Yeah, I feared a lot of terrible things in my life, most of which never happened." Kind of
exactly.
like we spend so much time in our head. And then
We
once you realize
do.
like it's all just a story that's made up that when we were kids,
Yeah.
just trying to keep us from pain or getting in a place of being uncomfortable. But when we're out of our comfort zone, and not quite in the panic zone, if you're not like way outside your comfort, but you still continually get in a place where you're outside your comfort zone. That's how people have just huge shifts over time, is they continue to try, they shift, they make new things, they're learning, they're applying. And it's just, and again, for me, I don't know how this is going to look like. We raised a bunch of money for real estate and other projects. We're trying to buy
Right.
businesses. I have a goal in the next few years to have a net worth of $100 million. Like, how are we going to get there? Well, there's only a couple ways we could get there, and a lot of things have to line up. But
Yep.
I'm going to go for it. If we don't get there, then at least we'll, do better than if I didn't have goals and try.
Exactly. And no matter what, it's an education. Anytime you
Yeah,
try something, you get educated. And it's the best
100%.
education you can get for real.
Yeah.
So, like, okay, so first, let's say that someone who's interested in joining Bronson Equity, what are the steps? Like, where do you start? How does it work? How does the whole thing work?
Yeah, so I think the first thing, for anyone, a lot of times people like, for me, while I was doing the medical sales, I was a registered investment advisor, which is called an RAA, and I'm still an
Okay.
RAA, but I'm a recovering investment advisor because I realized that, these traditional Wall Street methods, they're good for a lot of people. And really what they teach you to do is how not to lose your wealth, right? If you're a wealthy person, hopefully, but there's a lot of misalignment of interest. There's a lot of things about Wall Street that Tony Robbins had a book that said the average mutual fund will say their fees are 1.2%. These are like age dated funds with Fidelity or with Vanguard or these kind of things, but they'll have all these hidden fees that they legally do not have to disclose, administrative fee, cash free, BS, all these fees. And it ends up being 3.2%. Plus, if you have a money person, like a money
Yeah.
manager, they're typically taking 2% on top.
Oh, yeah. Oh,
They're
yeah.
taking 5 to 5.2% typically, and the returns are usually only 6 to 8% per year. So they're taking most of your money. People don't realize this is happening. It really makes me like, I'm really passionate about it because, so again, it becomes a glorified savings account. They're basically kind of forcing you, getting you to save. But again, if you can just put money in the bank, you're going to do probably just as well. So I think for a lot of people, it kind of comes from a knowledge of like, oh, these traditional Wall Street methods are not actually out. They're not there to serve me. So what can I do they call them alternative assets, but there's a reason they call it real estate, right? Because it's actually real assets, or it's a real property. It's not
Yes.
paper. It's not these
Oh my
paper assets.
gosh.
So I think it's much more common that people make money through Main Street, either through a business, like I know you work with a lot of business entrepreneurs and things, and as well as they're making money through being a part of other people's investments or other deals or real estate or other projects that are actual projects, not just, hey, I bought shares of something that's on a financial asset, on some sort of a Wall Street type of thing. So the problem is, I think that a lot of us, it's almost like we're in the Matrix, where we're taught that this is how you do things, and I could speak so much about stocks. There was a time between 1929 and 1954 after the
I'm not a
stock
huge
market
fan of
crash.
stocks.
Yeah, yeah. So, but it crashed 89% in 1929, and it didn't get back until where it was until 1954. So that was a 25-year period, and that doesn't include inflation. So you can imagine if your stocks were, at 40,000, whatever, you had all your money in there and it
Yeah.
crashed. And for how old am I going to be in 25 years? Are you going to be able to wait that long? And then with inflation, it's worth less. So there was a time in there people said, like in the 30s and 40s, oh my gosh, why would you ever buy stocks? Right. So it's funny how our mind is so shifted and everything is so different. So I think that for people, it's realizing what I'm doing is actually not working. I think that's the first thing.
Yeah.
And that, you know what, because really, no matter how much money you're making or how much money you have saved, stocks typically, unless they're dividend stocks, and even that's kind of a little rare and hit and miss, they're not actually giving you cash flow because if you take money out, you're actually reducing how much you have in there. And so
Yeah.
anyways, there's different things we get around that. But I think it's just becoming aware that maybe what I'm doing is not working and I should look at some other alternative.
Oh, absolutely. Yeah, and that's true. And again, like somebody could try stocks, learn from it, and then, be like, okay, well, maybe that's not the way I want to do it, and then do something else. And it's interesting. I was thinking about it today. I was just like, if you think about it, every successful, like millionaire, billionaire, almost every single one of them, if not all of them, are in real estate. Like, if you think
Yeah.
about it, right?
Yeah.
Like, most of the millionaires or billionaires that I know, they're doing real estate. Why? Because it's a smart decision. Like, I
Yeah.
just got done reading this woman's book, and I don't know if she's a billionaire yet, but she, in her book, talks about how she gets into real estate. I'm like, oh, she did it too. And I'm just like
Yeah.
seeing that everywhere.
Yeah.
So yeah, that's pretty impressive. And I didn't think about it that the real estate, because it's real, that the little point that you made, I like that. That's pretty cool.
Well, I think we're getting in a place too where everything is becoming so digital, and I think a lot of the younger generation, appreciates that cryptos and all these different
Yeah.
things. And I'm not like anti-crypto. I own a little bit, but it's
Great.
just the problem is what do you actually own? Like if you have
Yeah.
and here's an example of this. So I enjoy investing in precious metals. So I didn't really get that up till a few years ago that I realized there's actually a 5,000-year history of gold and silver being money. Right. So
Yeah.
actually, it used to be that it said on the $20 bill that you could take this in, it payable to the bearer in demand in gold. So you could slap it on the table or
Yep.
on a in a bank. This is in the 20s, 1920s, but before then, and they would give you an ounce of gold coin. Well, now that same gold coin is almost $3,500, but it's still it
Oh,
was a claim. So the actual money was the gold, but the actual so I think that what's happened is we've financialized all this. So now, if people want to invest in gold, they a lot instead of owning physical metals, they'll buy an ETF, which is an exchange traded fund, which is a financial asset that says, "Oh, I'll invest in this," that tracks what gold or silver is doing. The problem with that is that they'll buy 1 ounce of gold and they'll sell 20 shares. Right. And the problem with that
right.
is, we can see, well, what happens if there's a run on gold? There's a run on physical metals, there's a shortage. And this happened actually last year where JP Morgan had a silver fund where they said, oh, we have a ratio of 20 to 1 or whatever the ratio was. And they said, we're going to temporarily suspend this amount so we don't have to have actually that reserve in here. Right. So they're going to change the rules now so they didn't say what it was. They just said, we're temporarily going to allow so the problem is a lot of stuff is manipulated. And so you don't always know what's real. So if you don't have it in your hand, you're able to see, obviously, real estate, we can see businesses, we can see these things. And because of that, I just think there's going to come a time when things, when people start to panic. And we've seen a little bit of that lately when people rush to physical things that actually are tangible.
Right, exactly. And what are some of the biggest misconceptions that people have about real estate and investing? What are some of the things you've come across? And
Yeah,
how
I
can they
think
shift their mindset to see new possibilities?
Yeah. So one possibility we were talking about too is that in real estate, a lot of times we think I have to do it myself. So I've lived in a single family house. I'm going to go buy a single family house, right? It's just a very natural thing. Well, I'll just go buy another one. I'll rent it out. But the challenge with it is we're undervaluing our time. And when we think about larger deals, there's a term that we use called syndication. Now, syndication, when I first heard it was syndication, I had a couple of references. One was like a crime syndication or like a syndicated TV show or something. But syndication
Yes.
is just a fancy word that basically when we pool together investor funds, we go buy a building. So the first multifamily building we did was 225 units in Texas. And so we went from single families to that. Well, how did that happen? Well, there was a team, right? I had a team member who had been doing
Yes.
this for 15 years. And so people didn't look at me and say, oh, you don't have the experience. They said, said, oh, well, yeah, somebody on the team has the experience, right? So we raised some money, we did this deal together. And so I think, again, everything is weird until you meet somebody who's been doing it for years or someone like, or you get involved in it yourself. And so this
Yeah.
is where I think being open, and you mentioned, your husband, you guys have done a lot of different things and tried different, it's like, it can be a
Yeah.
little bit overwhelming, but like being open to new information is how people can find something new. And I just talking on a call with a guy right before this who's a physician, makes like over $1 million a year, and he's paid. I think he paid like $600,000 in taxes last year. And I was like, well, there is a way. There are certain oil and gas deals that allow for. I'm not a tax professional, but there are certain deals that allow for ordinary income tax reduction if you invest in certain deals. So 100K
Yeah.
invested reduces taxes by like 80 to 85,000 of taxable income. So
That's right. And it's funny because like even myself,
yeah.
taxes are the thing that whatever. I'm like, yeah, but then the taxes will be more complicated if we do this.
Yeah.
You know what I mean?
Yeah.
Like, and so I think we need to get over that. And I'm
Yeah.
just like, you know what? The taxes will work itself out. Don't stress it. Just do.
Yeah, yeah, and then you can figure things out. If you have a problem, then paying a lot in taxes is a problem. I mean, it's a good problem because it means you're making a lot of money. But then there's ways that you can start to solve that. Where you can say,
Yeah.
well, can I find a way to reduce that? And that's a great way to make more money too. So I think it's just being open to new thoughts and listening to different people. And just because you haven't heard of it or you haven't done it, the how people. I mean, we work with a lot of high net worth people in our group called the Wealth Forum, which is a mastermind for high net worth investors. A lot of sharing of knowledge. And the reason a lot of these people are worth 10, 20, $30 million is because they've continued to niche down on what they're good at. And they've also continued to find experts that can help them to get where they want to go. And a lot of
Right.
it's around how do we teach this to our family? How do we continue to kind of like have these values going forward? So just because you haven't heard of it, just because you're not familiar with it, doesn't mean that there's this whole niche of people that are actually doing this and growing wealth in a very unique way.
Yeah, exactly. And that's something too is like I'm always so skeptical of things. I'm like, what's this? Because my husband and I, we just recently decided to like invest in crypto, a small amount.
Sure.
Just like,
Yeah.
let's see what it does. You know what I mean? Just because again, we like to try things. So and
Yeah.
and at first I was like so skeptic of the entire thing. And then, somebody close to us was doing it and they're like, yeah, it's actually doing something. And we're like, okay. And it's sometimes we're the first ones to try it and sometimes we do it because we see a friend doing it and it worked out, you know what I mean?
Yeah.
But it's just
Yeah.
like we need to like try to get over fear. And right now that we're in, I'm like, oh, this isn't so bad and it's really easy. I don't have to do much. I just have to, just get on every day and see what's going on and that's about it, and
Yeah.
it's simple. But so do if I want to make sure I understand this right. So with what the multifamily real estate do so like basically you have a group and you all like you invest in like property, right?
Yeah.
And then you have is it like one person that like basically takes care of all the menial stuff or whatever stuff like the making sure that it's running and tenants and things like that. How does the work intricately? How exactly?
Yeah, so typically with a deal, we'll have people do different functions. So one person will, basically like, we'll help raise capital, and then,
Okay.
maybe another person is really good with asset management, so they'll be really experienced and versed, like the partner I mentioned, been doing for 15 years. And then
Okay.
we'll have, someone else maybe found the deal, somebody else, and we're all kind of involved in different levels. We'll have people
Okay.
in different parts of it, but the nice thing is the bigger the project, typically the more like the better help that you get. And I'll give an example of this. If there's a property manager managing 100 units, but they're 10 units each, right? So they have to have 10 different properties that they go around to every day, every week
Sure.
trying to manage that
Yeah.
versus they're all in one location, right? If they're in one
Right.
location, you get better management. You actually pay less for it as an owner. So instead of paying for single family in most markets, you're paying 8 to 10% typically of the rent that comes in. Well, for large buildings that are 100 units, you're paying 3%. You're paying a much lower percent, but there's more income. So you get better reporting, you get better results, you get on-site people. And so you'll have an on-site maintenance person, you have an on-site leasing person, you'll have, sometimes multiples of those, right? So you have people that are kind of helping out. So the larger the deal, and even if it's hundreds of units, you'll have more and more people and more help involved involved. So there's actually less to do as an asset manager. There's the part of you do need to manage the manager. One challenge we have with property managers is sometimes things go well until they're not. And then you,
Yeah. Uh-huh.
oh, hey, you're doing great, but you're spending way too much money. Or why is
Uh-huh.
vacancy up to, why do you have a 20% vacancy or what's going on here, whatever. And so you have to kind of really make sure that you're kind of following up. And so
Right.
there's some work to that part as well. So
Well, there has to be work to everything, obviously, but it sounds like because, especially since it's a group effort, it kind of takes the weight off of everybody a little bit, it seems.
yeah. Yeah,
And
totally.
that's,
Yeah.
I think that's genius how
Yeah,
that's
and I think
thought.
it really is a team sport, and that was a big shift for me because in medical sales, I was a rock star sales guy, but it's because I did everything myself, and so I've had to really get
Right.
used to like, well, I don't do everything myself, right? I have partners and I trust them, and some partners I definitely do more deals with. We've done many deals together. Other ones I'd say, I think I'd rather not because we just over time we've realized we have different values or things,
Yeah,
they don't really pull their weight in the same way, and so I think that's just something you figure out along the way.
I think so. Okay, so mindset and limiting beliefs. I want to talk about the mindset, money and mindset. That's what I wanted. Here we go.
Yeah,
We got through the words. Mindset and money. So, because like you said something earlier, I don't quite remember what you said, but it was something about like, so people, money can flow, right? There's cash flow, but then money being able to stay is another thing. I'm learning about this myself. Like money can flow, but then money just kind of flows away sometimes, you know? And
yeah,
so how do you have a money mindset that is healthy? Like, how did you shift your mindset when it came to money, being able to actually make money, retain money,
yeah.
and all that? And you know what I mean? So, like,
Yeah.
what's your
Let's
mindset when
talk
it
about
comes to
this.
money?
So, Tony Robbins, I'm a big fan of. He says about 80% of success in life is just having the right psychology. And I've had the privilege of interviewing 2,500 millionaires, average net worth of about 2 million, and ask them questions about how they do
Oh,
things.
that's awesome.
And almost all of them have some kind of mindset. Now, I've discovered this thing in kind of my research is this thing I call wealth worthiness. And basically, what it means is a lot of people, they kind of like, I see somebody makes 100,000, they'll just kind of find a way somehow to make 100,000 each year, right? But the person who makes a million will just kind of figure out and find a way to make $1 million. And it comes down to this inner worthiness that we have. And so, most people, how this works is they'll stay where they're at, they'll regress, or they'll kind of make incremental changes. So, the person making 100,000, next year they make 110, they make 100, maybe get a job at 150. They'll kind of go gradually over time. And then, people like myself, where it went, it was a 20x net worth to multiple seven figures in 4 years. Well, how did that happen? Well, it came because I changed the wealth worthiness. Now, you see this in the same way in other aspects of life. If I show up to a party and I'm a single guy and I show up and I see a beautiful woman and I want to go talk to her, but my self talk is, you know what? She's never going to like you. You're not good looking. You've got nothing to offer. How's that
Great.
conversation going to go? It's not going to go, or it's
Not
not going
gonna
to happen at all. Or if it does, it's going to be
no.
terrible, right? Because you're show. So it's this idea of how do we speak to ourselves? How do we view ourselves? And we all have negative self-talk we've had to have to work through and things from when we were kids. But I think this issue of kind of worthiness and relationship to wealth is really this is how people make big jumps. And people can think it's a little woo-woo to do affirmations or visualizations, but most of the world thinks it's kind of crazy. But the people that are worth over 10 million, almost every single one has some sort of mindset practice they do on a daily basis. And so my book coming out called Rich Brain, which is basically on these wealth habits, how the wealthy change their brain
Mhm.
to change their bank account. That it's going to be all about that. What are the specific?
When's that book coming out? Because I
Well,
want to read it.
to be honest, I wrote the book and then I realized I was doing too much and I've got to go back and do a little more research and write it down.
Get
So
it done. I need the
it's going to be a
book.
series. It's going to be Rich Brain and then Rich Habits and
I
then
love it.
different things to it. So I soon I've just got to yeah, I've got
Okay.
to buckle down and do it. So I'll keep you
Okay, I'm
posted.
holding you to it.
Thank you.
I gotta read Fire Yourself
Yeah,
first.
I'm gonna fire
That was
myself, then I
10
can go
bucks
write the
time I
book. Yeah,
read
right.
that.
Exactly.
Uh, but yeah, okay, so it is a worthiness issue,
Yeah,
is what you're saying.
yeah,
That's huge. That's so
yeah,
huge. Like and if you think about it, all of our aspects of life, you can literally tell how somebody thinks about themselves by how they choose to live or
100%.
the choices they make. Yeah, because worthiness of how
Yeah.
worthy they feel.
So,
That is
yeah,
incredible.
it's huge.
So
It's huge. Yeah.
incredible. Yeah. And because like my husband and I, personal experience here, we like we were barely floating above, and I'm just like, man, I'm so tired of feeling like we're like constantly struggling financially. This is so
Hmm.
annoying, right? So I'm
Yeah.
like, you know what? I'm just going to change my mind. So I got an
Yeah.
app that will pop up and be like, money flows to us. And I would say it to my husband on a daily basis, money flows to us. And it did. Like, it was
Yeah.
amazing. Just by changing my mindset, money
Mhm.
flowed exactly when we needed it, but it was always spoken for. It was like flowed and it was gone, flowed and it was gone. And then I was just like, okay, we needed to stay. So that I'm like, money stays with us. And then it started staying more. It wasn't just like come, spoken for. It was
Yeah.
come, stay. What do I use this money for? And then we utilize it or whatever. So
Yeah.
yeah, I feel what you said. I've totally that it works. It sounds woo woo, but it is not.
Yeah.
It's
Well, I
like,
mean, our visualizations, our words are powerful. Napoleon Hill wrote a book called Think and Grow Rich. He's not really, I mean, we have the same last name, Hill, but he's not my cousin that I know of. But he basically had this thing in there that said, spend 30 minutes a day, visualizing or thinking about the person that you intend to become. 30 minutes a day visualizing thing. And what is that? It's creating it with your mind, because if you can imagine it, you can do it. And then if you're a person of faith, I'm not sure you're a person of faith, but those listening, it's like when God created, he said, let there be light. He didn't have to say, let there be light. He could have just snapped his fingers, there's light. But I think when we speak words, words are creative and they actually change things. They change, even people that believe in vibrational energy and things. It's like when you speak something, you're actually stating something, and there's power in our words. So we have to be careful what we say.
yeah, that's so true. And the more that you are focused on, I have a friend and he's just like all of his conversations and all of his thinking is all negative. It's always talking bad about someone. It's just like, and his life is not happy. His life is very closed off, and it's just like if you just speak positively, listen to positive things, allow
Yeah.
yourself to be, because yeah, you can really get your life is only as good as you feel about it. So
Yeah.
it's yeah,
100%.
I mean, it's a choice. Every feeling, everything we do is absolutely a choice. So yeah,
Yeah.
I love that. So okay, so where can people find your website, your book, your everything? And I
Yeah.
want to
Yeah.
make
Yeah.
sure that we put that
Thank
in the
you.
show notes too at the end.
Yeah, so the best way, I actually have a free gift for your audience, Elizabeth. I have
Oh, thank
a
you.
guide. Everything costs about 50 to 100% more than it did 5 years ago. They're saying
Yeah.
inflation is like 2, 3,
Yes.
4%. There's no way, because everything is twice as much. So how is that possible? So inflation is painful. When you go to the pump, you go to the store, it's like, ouch, that hurts every time. It's like I
Yes,
feel it
it
physically. Oh,
does.
how does it? So how do you get on the other side of the equation where you actually benefit? How to use it to your advantage? So this is a little ebook I wrote called How to Use Inflation to Your Advantage. It's 35
Yes.
pages, talks about investing in real estate, using debt to buy assets, precious metals, borrowing against it, some really unique strategies. If you text the word inflation to the number 33777, so you text the word inflation to 33777, it will ask for your email, we'll send it to you, and then you can hear about our future offerings and what we're doing in our book and things like that. So
Oh, I love it. Hey, and is your book on Amazon?
it's on Amazon. Yeah.
Yes. Okay, because I like to have my books on Kindle. It's easier
Yeah.
that way because my phone's
Kindle.
always.
Yeah. It's audio, all of them, Audible, all the things. Yeah.
Yes. Oh, even
Yeah.
Audible? Okay.
Audible.
Because
Yeah.
my favorite is to listen to it because I have
Yeah.
6 kids. And when I'm in
Wow.
the car, I got to tune them out so I can drive safer.
6 kids in a podcast. That sounds like a t-shirt or something.
I know, right? 6 kids in a
That's
podcast.
awesome.
I'm not sure how I was able to actually do this with 6 kids, but
Amazing.
we're
Yeah.
doing it.
Incredible. Congratulations.
Thank you.
Bye.
Yeah. Okay. Perfect. And thank you. That is such a sweet gift. So stoked for that. Okay. So yeah, whatever links and stuff you have, just email them to me and I'll throw them on the show notes so that the audience can have it. And
Okay.
then,
Awesome.
yeah, make sure your website's on there so they can check that out
Okay.
because
Perfect.
website's rad.
Thank you.
So yeah, you've been such a wonderful guest. Thank you so much. I'm so glad that we were able to have you on here today. I've definitely been educated myself today, and I really appreciate your insights and your wisdom and your journey. It's awesome.
Thanks so much. Thanks so much.
Yeah.
A lot of fun. Thank you for having me. This is wonderful. Love what you've created here. Love what you're doing with your audience. Thanks so much.
Thank you. And we'll have to have you on again, and I'll also see you on your podcast.
Sounds. I can't wait. Can't wait to get you on there. We'll BS our way through it too.
Yeah, we will. Yay. That's the only
I
way
love
I
it.
can do things.
Yeah. Love it
All right.
so
Thank you
much.
so much. You have a great day.
You too.
Okay.